This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
In our previous lectures dealing with loss reliefs, we've seen how it is that an unincorporated trader is able to utilise a loss sustained in his or her business for any ongoing business. So any business that is up and running, preparing accounts to its normal year-end date, being assessed using CYB, we've seen how it is that we are able to utilise losses when they arise. The first thing we learned, of course, was that if you do have a loss, the assessment is nil. And that's a universal truth, whether dealing with income tax or corporate tax or whatever type of income we may be looking at. We never put in a negative, a bracketed figure into a computation. The assessment is quite simply nil. And what then can we do with the loss in terms of the available reliefs? Well, again, for any normal continuing business, we had choices. The simple one, just simply carry forward. Carry forward that loss to set off against the next available trading profit of the same business. Carried forward against future trading profits of the same trade. Clearly, that would stop at a point at which the trade ceased to trade. What we've also seen is that during those normal continuing years of trading, there's a more immediate relief that is available to the taxpayer, should they choose to claim it. And that is to set off the loss against the total income, this time the total income of the current tax year and or the preceding tax year. And what we also saw is if such a loss relief claim was made, whether for the current or for the preceding year, then for the tax year in which such a loss has been claimed, and presuming the loss is bigger than the total income, so we've reduced the total income to zero, then the remaining loss, subject to the maximum loss calculation, the remaining loss may then be treated as a capital loss. So it can be moved, although it is a trading loss, it can go into your capital gains calculations and be treated as a capital loss. And those reliefs were available from the very first tax year in which we started to trade all the way through to the very final tax year. But now what we look at is the very specialist circumstances of opening years and the closing years of a trade. We've already seen in Chapter 6 how it is that in both opening and in closing years we need specialised bases of assessment by which to determine what profit will be assessed in those tax years, whether they be opening or whether they be closing. There were the special rules, the bases of assessment in opening years and then in closing years. Now what we will see is that we need to apply those same bases of assessment, here to begin with in Section 5 in opening years, and then after that in closing years. We need to apply those specialist bases of assessment, but what we may now see is that falling into any of the basis periods for the opening or indeed closing years, there may be losses. And because of the fact that we're dealing with either a new business that has just started to trade or a business that has now ceased to trade, in addition to the reliefs that we've already spoken of and seen, as we've just reviewed in the previous two sessions, there are specialist reliefs available. There's a specialist opening years relief here, and at a later a specialist closing years relief that has its own name. It's called terminal loss relief, that again, as we've said, we'll be dealing with later. But here now we've got to deal with opening years. Now again, this will require you to revise through, and if you need to, then do pause the lecture at this point, but you need to revise through the bases of assessment that applied in opening years. Without that knowledge, we're going nowhere. So you need to have that basic knowledge. The knowledge that in the very first tax year, we use an actual basis of assessment, and we then work through to using, as soon as we possibly can, a current year basis. In between times, of course, is where we had the problems, most notably in the second tax year. And we'll be revising that with the losses situation in a moment. What we also saw when a new business started to trade is that unless it chose 31st of March or 5th of April as its accounting date, then there would be overlap profits What they were profits that fell into more than one tax year's basis period. So we had those overlap profits. Now what that then gave rise to was the idea of overlap relief, which meant that in the very final tax year in which we traded, what would we do? We would deduct from what would otherwise have been the assessment. We would deduct there the overlap profits. There it was known as overlap relief. Well, when now we deal with, within our opening years, a loss for one or more of the accounting periods, there is no such concept as an overlap loss. So we will be using a loss once, applying, as I said, our normal bases of assessment. And if a particular loss-making period falls into more than one tax year in terms of the basis periods used, then any loss will be applied to the first of those two tax years. First come, first serve. The first tax year in which a loss arises, that is the one that gets that loss relief. But you can't have the same loss over again in a subsequent tax year. So there is no concept of overlap loss. We get to use a loss once, and should it arise in more than 2 years, we apply it to the first of those 2 tax years in which it is within the basis period. So, just reviewing those points made, in the first tax year of trade, the assessable profit or loss is measured, as we know, from the day we start trading through to the following 5th of April, our actual basis of assessment. We then move through to the second tax year, of course, and that would then mean we look for, do we have an accounting period ended in that second tax year? If we do, as we normally do, is it a short period, is it a long period? Before eventually getting on to CYB there. And as we've said, unless the trader does prepare accounts to, here we say 5th of April, but given we do monthly apportionments, it would be the same outcome if we chose 31st of March. Unless you choose such a date, this will require some apportionment to apply in relation to the basis periods. Now, as we've said, a loss can only be relieved once. There's no overlap loss. So if in opening years a loss has already been taken into account in computing the assessment of one tax year, then it will be treated as nil when calculating the next assessment. So we can't get a loss twice. It is applied to the first tax year in which the loss arose. It will then be treated as nil should the same period be included within the basis period of a subsequent tax year. So again, if not already, I would advise that you revise through your bases of assessment for opening years, and then read through. There you'll see example 4. Read through example 4, treating it to begin with and thinking about it just as a normal opening year's problem. So you'd be looking at, when did it start to trade there? What's the relevance of that? That will dictate the first tax year of assessment. You'll then look at, what is the first year end? Not necessarily the first accounting period, but the first accounting year end, because only then can you use CYB. What that will then allow you to do is to determine the bases of assessment that apply in the opening years. I want you to consider that without yet doing the calculations. I will work that through with you once you have gone through and done as I've asked of you there. So pause at this particular point in time, and then once you've determined which tax year is the first tax year, what basis of assessment will apply, what would be the bases of assessment then in the second and third and any subsequent years, but I think that will probably be it so far as these years are concerned, first, second and third years. Once you have done that, then come back, don't yet try and do the assessments, come back and we will work through that exercise together. But I say pause it now and revise through that basis periods of opening years, please. Okay, let's see what we've got. Now, hopefully what you have firstly written down is that the first tax year in which we've traded, based on, as we underlined in the question there, the 1st of August 14, based on the start date, is 2014-15. I then expected you to write next to that what the basis of assessment would be. and it is, as it always is, actual. What do we then do? We identify the basis period. What do we mean by that? Well, that's simple enough. The start date, that was the 1st of August 14, through to the following 5th of April. Well, that will be the 5th of April 15. Is the 5th of April 15 the end of the 14-15 tax year? Yes, it is. So no, we now know we've correctly determined what is that first tax year. So what apportionment now, what calculation do we do? So how many months is it from the 1st of August 14 to the 5th of April 15? Hopefully we would work that out to be 8 months. And all of that 8 months is drawn from what is the opening period of 10 months, in which, unfortunately, our taxpayer made a loss of £20,000. So the loss computed here will be £16,000. So if the loss is £16,000, what is the assessment? The assessment is nil. So here in this working we are doing two things. We're doing as we've always done in opening years and worked the assessment figure. What we're also doing is to work out any loss that may be available for relief in relation to each of the relevant tax years. So what we've now done, based on a start date of the 1st of August and an opening period of 10 months through to the 31st of May 15, what we've done is to correctly determine that 14-15 is the first tax year, using our knowledge of bases of assessment in opening years. First year is actual, start date to following 5th of April. How many months is it? It's 8 out of an opening period of 10 in which we made a loss of 20,000, so 8/10 of 20 is a loss of 16,000. Any loss figure arising will give rise to a nil assessment. So two figures here computed, the loss available for relief and the fact that we've got a nil assessment. What we can then do with those losses, well, we'll discuss that again in a moment's time. But let's continue with actually calculating what these figures are. So we've dealt with 14-15, we move on to what is now the second tax year, 2015-16. How do we deal with the second tax year? As we know, the most awkward one. We ask, do we have any accounting period that ends in this, the 15-16 tax year, the second tax year? Now the answer to that question is yes, we do. We have an accounting period through to the 31st of May 2015. Well, that ends in the 15-16 tax year, of course. But how long is that period? Here it is a 10-month period. We have a short period ending in that tax year. Therefore, we know that from this year onwards, until we get to the final year anyway, we will assess 12 months of profit. The only question is which 12 months. So where in the second tax year you have a short period ended, which 12 months do we assess? We assess the first 12 months. What do we mean here by the first 12 months? Well, again, of course, from our start date. Our start date here is the 1st of August 14, through to a date 12 months later, that there presumably would be the 31st of July 15. The 31st of July 15. So our first 12 months, 1st of August 14, the start date, to the 31st of July 15. Okay, what goes into that? Well, to begin with, of course, we've got the full opening period. So we have got the period to the 31st of May 15, and that period to the 31st of May 15, well, that was a loss, as we know, of £20,000. A loss of £20,000 there. Well, are we going to be able to claim all of that £20,000 loss now in relation to this particular year? Well, the answer to that has got to be no, because, of course, we have already used some of that loss To be precise, we have used some £16,000 of the loss in the previous year. So that is now reduced less what was used in 2014-15, and that was £16,000. So that will bring us down to a loss of £4,000 there. So 4,000 is still available. But we haven't dealt with the full period, the full 12 months. That was the period of 10 months. So we've now got to add in a further 2 months of profits. So the next period was a profit-making period, the year ended 31st of May 16, in which we made a profit of 48,000. So what profits will now come in here? We have already assessed the first 10 months, so we now need 2 months out of what is then a 12-month period, in which we made a profit of 48,000. So what is 2/12 of 48? That is a profit of £8,000. So what does that leave us with as an assessment? Now notice we've got more profit, 8,000, than we have available loss, 4,000. So the net is an assessment, a profit of £4,000. There is no loss relief available in relation to the 15-16 tax year. Why? Because there is no loss in that basis period. What has happened to that 4,000? We have already got the use of that loss. We have been able to offset that loss against a profit of 8,000 that would otherwise have been assessed in 15-16. As we see here, the assessment is not 8,000, it's 4, because it's been reduced by this available loss. So you've already used the loss in reducing what would have been a profit assessment of 8 down to £4,000. You are not also going to get a separate loss relief available. So we've now worked out what losses, what assessments have arisen over the first 2 years. We're then back to normal rules. We're now through to 2016-17, the third tax year. Do we have an accounting year ended in that year? Yes, we do. So current year basis will apply. What does that mean? Accounting year end here. What was our accounting year end date? 31st of May. What ends in the 16-17 year? Year ended 31st of May 16 is the one for us, where we have a profit of £48,000. A profit of £48,000 there. Now what it would also mean is that we've got that profit of 48. We have already brought into assessment £8,000 of the profit. Now where there are profits that fall into more than one tax year, we do of course have, as we see here, overlap profits arising. Remember, there was no overlap loss. We made a loss of 20,000, we used 16,000 there, and we have used 4,000 there. But we do have overlap profits. 8,000 of the 48,000 was assessed in 15-16, and that 8 is a part of this 48,000, so the overlap profits are £8,000. So no overlap losses, but yes, we do have overlap profits. What do you do with those overlap profits? When you get to the very final tax year in which you've traded, then you'll be able to deduct that overlap profit, labelling it, if you choose, overlap relief, from the profits that would otherwise have been assessed in that final year, and thus you get the relief at that point. But here, where losses arise within the opening years, you must apply, as ever, your normal bases of assessment in each of here, the first, the second and the third tax years, bearing in mind that if a loss, like this 20,000, falls into more than one basis period, then it will be allocated in priority to the first tax year in which it falls. There is no concept of an overlap loss. So look again through what we have done. Check out then the answer in the back to this particular example. Make sure that you are happy with it. So looking at what we've computed here, we can see that there is one loss relief available. That is the loss of £16,000 in relation to what is its current tax year, the 14-15 tax year. So let's ask ourselves, what could you do with that? What we know from the normal rules that we've seen previously is, very simply, you could carry forward that loss to set off against future trading profits of the same trade. What future trading profits of the same trade do we have? There, already circled, we have 4,000 as the profit arising, that net profit arising in 15-16. That would use 4,000 of the 16,000, leaving 12,000 to go forward against that £48,000 there in the 16-17 year. So, with a carry forward, the next available future trading profit of the same trade, 15-16, take out the entire 4,000, on to 16-17, and with the remaining 12,000 deduct from the £48,000. Other than that, what other uses? Set off against the total income of the current tax year. As we've just said, the current tax year is there, 14-15, and or set off against the total income of the preceding tax year. Now, of course, to know whether or not either of those reliefs would be available, we need to know what, if any, other income existed in the 14-15 year, because from this, the business, there is a nil assessment, so the total income will be that other income of the current tax year. Then we want to know what total income we had for the preceding tax year, 13-14. Now, unless we knew what that other income for 14-15 and the total income for 13-14 was, we would not be able to determine whether either of those reliefs may be of any use to us. But the options available, may I repeat, set off against the future trading profits of the same trade, that is £4,000 in 15-16, and the remaining 12 against the 48,000 in 16-17. In terms of a more immediate relief, use the 16,000 against the total income of the current tax year, 14-15, if there is any. Clearly, if there was not much income, certainly up to 10,600 anyway, using the current level of personal allowance, you would not be thinking, you would not be contemplating making any such claim in the current year, because you'd just be wasting your personal allowance, as we've seen previously. Other than that, set off against the total income of the preceding tax year, which might be a greater likelihood of being able to use that. And that, therefore, would again be determined by what was that total income in 13-14 as compared to the level of the personal allowance, to see whether the 16,000 would gain an optimal use there. But in addition now to those routine, those normal loss reliefs that would be available to any ongoing business, we now see in section 5.1, appearing now upon your screen, what is the specialist opening year's relief that is available. So we're trying to help out these new businesses that make losses. Now, the only way we can do that in terms of a more generous relief is to allow the losses to be carried back for a longer period of time than is currently available to you. At the moment, the only period you can carry back to is the preceding tax year. Remember, you've got your current year relief, your preceding year relief against total income. Well, as we'll now see, this specialist opening year's relief will allow a more generous carryback in relation to the losses for which this relief is available. So let's deal with that issue first of all. This relief, this opening year's loss relief, as you may refer to it as, is available for losses incurred in, there you go, the first 4 tax years of trading. So it's only available for a loss sustained within the first 4 tax years of trading. Hence, it's a specialist opening year's relief. What can you then do with that loss? Relief is available against total income. So again, just like the current and preceding year, it's against total income. But this time, it is of the 3 tax years preceding the tax year of loss. Now this is likely, of course, to be taking us back to years well before we'd even thought of setting up our own trading business, where presumably maybe it was employment income that the taxpayer had, having previously been employed before then becoming self-employed and sadly sustaining this loss. So it does not matter that any of the years you carry back these reliefs to happen to be years in which you actually hadn't traded prior to the start of trading. We've said it's a carry back against total income of the 3 tax years preceding the year of loss. Now this is a single claim. Unlike the 2 separate claims that we've seen for the current year, one claim, the preceding year, a separate claim, this opening year's relief is a single claim, and it goes against all of the 3 preceding tax years. Now the order, as we see here, the relief operates against all 3 preceding tax years on a first in, first out basis. We go to the earliest year first. Now we'll apply that in a moment, but again, just as regards what we do, as with current and preceding year relief, partial claims are not available, and hence personal allowances may again be lost. You cannot make a partial claim. It goes against total income. If the loss is bigger than the total income, then all of the total income will be removed and all of the personal allowance will be lost. The loss available for the risk relief is computed in the same way as profits, i.e. the calculations that we've just done are the calculations you do, not just for the normal reliefs, current and preceding year and carry forward, but also it calculates the loss available in the opening years as well. So in the early years of trade, the following reliefs are available. This specialist opening years relief, this is the new one, we'll practice it in example 5 in a moment, and of course, as ever, relief against the total income of the current and or previous preceding tax year, including, of course, didn't mention it before, the possible extended claim against chargeable gains there, or just the carry forward against future trading profits. So how does this new one work? Well, we've already done the calculation of a loss. We know how to do that. And all we're doing is to say that instead of merely carrying back for 1 tax year, we may carry back for 3 tax years, going to the earliest year first. It is a single claim, so we'll go back to 3 years prior to the tax year of loss. If the loss is bigger than the total income, we'll move to 2 years prior to the year of loss, and then finally to 1 year before the year of loss. A single claim, again going in that order on a first in, first out basis. Right, let's have a little look therefore at what we've got now in terms of example 5. Right, in our first opening year's example, all we did was to work out what loss was available for relief in relation to any tax year. What we've now learned is that in addition to the normal reliefs as previously seen, we've now also got this specialist opening year's relief. So what have we got? Fiona started trading on the 1st of July 14. Critical date, because we now know that 14/15 will be the first tax year of trading. Her results for the first 2 years are as follows. Good news to begin with, our opening period is a full year end. That means that CYB will be available from the second tax year onwards, because the year ended 30th of June 15, that of course using CYB will be assessed in 15/16, as 14/15 is the first year, we know that 15/16 is the second year. CYB will be available. But of course what we see is that within its basis period there is a loss. We will have to work out how much of that loss will be allocated to 14/15 and how much will be allocated to 15/16. Then we get to profitable ways. Good news. The year ended 30th of June 16. Again, a CYB assessment. That will be assessed in 16/17. And there you've got your profit of £2,500. Of course, given that we've got this specialist opening years relief available for a loss sustained in any of the first 4 years, here there will be losses in the first 2 tax years, 14-15 and 15-16 respectively. Then we can go back 3 years prior to the start of those tax years. So we need to know what happened in the earlier years. So remuneration from employment, Fiona had previously been employed, probably as you'd expect there. Remuneration from employment, which ceased on the 30th of September there 13, on the 30th of September 13, i.e. in the 13-14 tax year. There we go, we've got our employment income figures. Fiona has other income of £4,500 gross per annum, also to include within your total income calculations there. Alright, first exercise to be done, work out what losses, what assessments we have within those opening years. So again, notwithstanding the introduction of the new loss relief available, I would like you to identify what losses, what assessments arise in the 3 years we see indicated there, 14-15, 15-16 and 16-17. Work out the assessments, work out the losses available for relief in each of those years, and state where those losses could be used, whether that is the simple carry forward or whether it's the relief in the current tax year and or preceding tax year, and then give some thoughts to, well, how would this new specialist opening years relief apply? If you did, as we have, made a loss in the first tax year, 14-15, where would that go against? It would go against the total income of the preceding 3 tax years. On what order? In what order? A first in, first out basis. So from 14-15, we go all the way back to 11-12. If the loss was bigger than the total income in 11-12, we then move to 12-13. And if the loss was still bigger than both 11-12 and the 12-13 total income, you would come to 13-14. Set off against the total income of the preceding 3 tax years, the 3 years preceding 14-15, we have identified there, in order on a FIFO basis, 11-12, followed by 12-13, followed by 13-14, though that's not going to happen here, given the relatively small amount of loss. Could you do that for me, please? So stall, pause at this point in time, and attempt to perform that exercise. Work out the losses, work out the assessments, and identify what reliefs would be available. How then we present that, I'll do that with you on a separate working page once you have reviewed through and done what I've asked you to do there. So let's see what assessments and what losses arose in each of the opening years for which the information provided will allow you to determine. Now remember again our starting point as we identified before this. You looked at the start date. Fiona started trading on the 1st of July 14, thus making 14-15 our first tax year, as it always is then an actual basis of assessment. What does that mean? From the date you started trading, the 1st of July 14, through to the following 5th of April. How many months is that? It is 9 months. Out of how long is the opening accounting period? The very rare circumstance here that it's actually a full 12 months, a year. So it's 9/12 of the loss of 12,000. That is a loss of £9,000, and because it's a loss in the basis period, the assessment is purely and simply nil. So 14-15, actual basis, start date to following 5th of April, that's 9 out of a 12-month opening period in which we sustained the loss of 12,000, so a loss of 9,000 arises, a nil assessment. On to the second tax year. Well, that is 15-16, and as we said, it's very unusual to get this, but very good news, we're able to use CYB. Why? Because we have an accounting year that ends in that tax year. To be precise, the year ended the 30th of June 15. What did we sustain in that period? A loss of £12,000. But of that £12,000, we have, of course, already used their £9,000 in the 14-15 tax year. So less what was used in 14-15, that was £9,000, bringing us to £3,000 now available for relief in relation to the 15-16 year. As we know, we're up and running on CYB, so 16-17, current year basis will apply, year ended 30th of June 16, and that is a profit of £2,500. Job done. To summarise, as we saw, the losses available for relief for 14-15, £9,000, for 15-16 tax year, £3,000. So that was the first exercise we needed to do. What can then be done with those losses in terms of the available relief claims? Well, if we wished, we could simply carry forward those losses to set off against future trading profits of the same trade. So 9,000 would be carried forward from 14-15 into 15-16. It too is a loss-making period with another nil assessment. Add in another 3,000 to carry forward into 16-17. There is a trading profit of 2.5, so the first 2,500 of the £12,000 of total losses now available for relief would be used against the 2,500 assessment in 16. Using 2.5 out of £12,000 of loss, there's your total 12,000. 2,500 would be used in 16-17, leaving you 9,500 to carry forward to 17-18, again targeting purely in these future years the trading profits of the same trade. Whether those loss reliefs would be of any use to you will depend on 1. In the 16-17 tax year, what, if any, other income did you have? If your only income was 2.5 trading profit, then all of that is covered by the personal allowance anyway. What then would be the trading profit and the other income for the 17-18 year? If you wanted any more immediate available relief, then for the 14-15 tax year, the £9,000 of loss available. What could we do with it? I hope you've already written down. Set off against the total income of the current tax year, 14-15, and or the total income of the preceding tax year. Well, that must be 2013-14, the 13-14 tax year. Remember again, those claims have to be made in full, but you get to determine whether it's the current tax year or the preceding year, or both, depending on the levels of income, of course, and if it's both, the order in which you choose to claim them. On to 15-16, £3,000 worth of loss available for relief, set off against the total income of the current tax year, 15-16, and or the preceding tax year, if there is any, 14-15 there. Now, if you've gone down those routes, then if there is still any loss remaining after making the current and preceding year claims that you have chosen, then there is only one further use, carry forward against the future trading profits. Well, I say there is only one further use. If this was a normal continuing business, then that would be true. But now what we have is the specialist opening year's relief. Now, there's no new calculation of the losses. You already have it. The loss available for 14-15 is 9,000. The loss available for 15-16 is 3,000. We do not have to do any separate loss calculation for the specialist opening year's relief. All that changes is what you can do with those losses. Now, we've already identified, as we read through the question, any loss for the 14-15 tax year using opening years would go back 3 years. Well, 3 years back from 14-15 would be 11-12. What does it go against in that year? The total income. If it is bigger than the total income of 11-12, then it would go against the total income of 12-13, and if there was still loss left over, it would then finally go against the total income of 13-14. That, of course, will not be the case given the relatively small amounts of loss and the amounts of income that arose in those earlier years. For 15-16, just a £3,000 loss available there. Where would it go? Well, from 15-16, of course, you would then go back to the 12-13 year. Now, if you do make that claim, there's more than enough income to absorb the small £3,000 of loss available, but if the loss were bigger, it would go against the total income of 12-13, followed by 13-14, followed, if there is anything, by the total income of 14-15 there. Those would be your possible claims. Now, how do we then show the use of that loss? Now, again, a columnar approach will be adopted. Now, here, for the years concerned, we know that with an opening year's relief claim, we could go back as far as 11-12, and we've already determined assessments through to 16-17. So there's an awful lot of years spanned here, and we need, therefore, a lot of columns to take you through from 11-12 into the 12-13 year. From the trading income point of view, you know the assessments. They are, in 14-15, nil, in 15-16, nil, in 16-17, £2,500. Prior to that, we had employment income. The figures are given. You copy them into your answer format. And we're then told that in every one of these years, there is other income gross of £4,500 to further be added in. So I'd like you please to set up a working page now with tax years referenced from left to right in columns on the right hand side of your page from the 11-12 tax year across to 16-17. If indeed you can fit all those, what will that be? 1, 2, 3, 4, 5, 6. If you can fit in all of those 6 columns. Copy in the given employment income figures from the question. Copy in then from what we've just computed, the trading income assessments. And of course copy in from the question the other income of £4,500. Get the total income and then show where the opening year's relief will apply. Shouldn't be difficult. We know it goes against total income and we know when and where it can be used. Again, following the information in the question, assume that the personal allowance for 15-16 applies throughout, so just give a routine £10,600 worth of personal allowance, but then calculate, as the question asks you to do, the taxable income for all years after claiming the opening year's relief. Right, again, if you could pause at this particular point in time and then proceed to work out the taxable income figures as requested. So pause now and then come back to this and we'll see the answer in front of us and review. Okay, well, let's hope you're looking at in your own answer something that is not entirely dissimilar from what we see here. Again, we've set up columns for each of the tax years from 2011-12, the earliest year to which our specialist opening year's relief may be carried back to, through to the 16-17 year, the latest year we can work to in relation to the assessments, the trading profit figures of the newly launched unincorporated trade. So what do? We copy from the question the employment income figures, from the question the other income figures, from our working of trading profit, the nil assessment in 14-15, nil assessment in 15-16, the £2,500 assessment in 16-17. So at this stage, having done these calculations for trading income in our working one, we now just copy the numbers either directly from the question or from our first working into now our answer format. What does that give us? Total income. And it is against such total income that the opening year's relief is applied. So from 14-15 loss, that's where the nil assessment that gave rise to the loss, we can go back 3 years, 1, 2, 3 years, we go all the way back to 11-12. How much loss was available? 9,000. The total income at 17.3 is big enough to absorb it, leaving us with net income of 8.3, all of which is covered by the personal allowance. Sadly, of course, it will mean that some of that personal allowance will now be wasted as a result of the loss bringing down the level of net income below the level of the personal allowance. But all of the 9,000 is now used. Had we had a loss bigger than 17,300, then all of the 17,300 would go, and you'd then move against the 1213 figure of total income of 15,550, and finally, if necessary, against the total income of 1314, 10,368. None of which is necessary because we've only got £9,000 of loss. On to the next loss. That was a 1516. There is the nil assessment. How much was the loss in working one? It was £3,000. Where does that go to from 1516? Back 1 year, 2 years, 3 years, back to 1213, and there we see the £3,000 of loss being used. Again, all of which is used against income that would otherwise have been taxable, because it still leaves you with net income sufficient to cover the personal allowance there. So all of that will achieve a tax saving. Again, had the loss been bigger than 15,550, the total income of that year would have then gone forward against the total income of 1314, if necessary. Not that there would be any, but against the total income of 1450. Okay, check through, make sure again you're happy with the statements made there. We'll now bring this particular session to a halt, and it will leave us with one relatively short final session in which to deal with, very appropriately, the last of the loss reliefs we need to go, which is the loss sustained at the very end of trading, known as terminal loss relief.